everybody. My name is Justina, and I'm at the Futurist Conference here in Toronto with Andrei. Andrei, how are you?
I'm doing well, thank you so much.
Yes, and we're here to talk about the platform that you have built, and I'd love to learn more about it and explain to people why uh, it matters.
Sure. So I'm the CEO and founder of APX Lending. We are a regulated digital asset credit infrastructure company. So we build credit infrastructure for both our own lending business and for our lending as a service clients. What does that really mean? We offer our borrowers the ability to borrow Canadian and USDC funds against their Bitcoin or their Ethereum. This is done in a fully compliant manner. We are the first company to actually receive CSA approval to do so in Canada. That's one vertical to the business. The second vertical is we offer our entire technology as a white label solution to banks, to credit unions, to other crypto exchanges that want to offer the service to their clients. And really, behind all of that is giving people the ability to actually get liquidity from their crypto holdings without selling it. So if people don't want to sell their Bitcoin, but they want to access the liquidity behind that, they don't have to sell it anymore. They can borrow against it. That way, they don't miss the upside if Bitcoin goes up in the future, and they avoid paying taxes on capital gains if they were to sell. When they borrow, they don't pay those taxes. So,
what kind of loan to value ratio?
So we give out loans all the way up to 60% loan to value.
Okay.
So if you have $100,000 worth of Bitcoin, we'll give you up to $60,000 worth of loan.
And maybe, so in terms of risk, like, do you help the customer manage the risk, or is this something that people need to be aware of on their own?
Well, so absolutely. So first of all, we are a regulator approved entity. So the collateral that the client pledges as security for the loan is held in segregated cold storage wallets with a qualified custodian. They're insured. They are not rehypothecated. They're not reinvested. They're not farmed out into yield strategies. They sit in the wallet that the borrower deposits them into, and they're visible to the borrower for the duration of the loan because they're segregated. So if you were to take 3 loans from us, each loan's collateral sits in its own wallet, and so it's visible to you for the duration of your loan. So there's collateral risk, which is one of the most important risks. Then there's the volatility risk. What happens when the price of Bitcoin goes up and down? We have a very, very unique solution. So first of all, we give out loans up to 60% loan to value. So what we do is we evaluate the value of that collateral every 15 seconds for all of the loans that we have out.
Wow.
So always continuous evaluation. So we know exactly the health of your loan at any point in time. If the value of the collateral falls after a certain point, at 80% loan to value, we start notifying you. We start saying, hey, listen, you might want to top some collateral up or pay back some of your loan, but you don't have to do anything. You just notify it periodically. When that collateral, if it were to fall even further to 90% loan to value, so in my example, if you have $60,000 worth of loan and $100,000 worth of Bitcoin, that Bitcoin would have to fall down to 66,000, almost twofold. Before we started liquidating it partially, little by little, just to keep your loan healthy. We don't liquidate the full collateral, just enough, just to keep you healthy, just to keep you under 90%. So that's how we take care of volatility risk. So those are the 2 risks that I wanted to address.
And Andrei, I really appreciate what you're bringing here, but I think for people maybe who don't know, right? Let's take it back a step, right? Because let's translate it into relatable terms, like, the benefit of this, right, is like what you said, non-taxed.
Yep.
It's, what I'm hearing is you help the user risk manage by giving them alerts.
Yep.
And also it's fully regulated.
Yep. Exactly.
And so what I would say for consumers who, are maybe like early investors in Bitcoin, what I'm hearing is also it makes it an easier experience. Let's say someone doesn't, is not, doesn't want to run their own wallet or doesn't want to use it.
Exactly. So here's the thing. You bought Bitcoin.
Yes.
You now are sitting on a bunch of Bitcoin. And these are real life use cases. So our clients, they borrow from us because they want to buy a car. They want to buy another property. They want to buy more land. They want to send their kids to college. They want to start a charity. Like, these are all real use cases that people borrow.
Yes.
So we give people that freedom to do those things. And really, the most critical thing in this whole enterprise is, how do you make sure that your collateral is safe, and at the end of the loan, it comes back to you? Like, as a user, you shouldn't worry about, you should worry about other things, but that's the key thing you should worry about.
Absolutely.
And so the way we do that is we spend 2 years working with with the regulators in Canada. We were the first to actually get approval because we put together a business model that protects the borrower. And that's what I'm
That's what
talking
it
about.
sounds like.
We
Yes.
don't do anything with the collateral. We don't reinvest it. We don't,
Because even
rehypothecate
at
it.
banks, right? They
Banks
do that.
reinvest it, of course,
That's
and that's
right.
why sometimes there's a run on the bank. We don't do that. So your collateral it sits in the wallet. It's insured, and I mean it sits in a qualified custody wallet, so it's insured. Um, and it's called custody, and so it's protected by all sorts of licensed custodian framework. So I don't want to say I don't want to say because this might seem like financial advice, but it's definitely safer with a qualified custodian than in your wallet at home. I can tell you that much. So we give all of that.
Is there insurance on
Yeah,
it?
so there's $250 million worth of insurance in the wallets that we custody it in. So your collateral is safe. You get funds to, if you want to buy something, you want to reinvest. You have that freedom and that flexibility, and really, it's all about wealth preservation because that's what wealthy people do. They don't sell their assets; they borrow against them, and so that's what we spend all this time bringing to the table, and that's why it's a phenomenal product, and it's because of the regulatory oversight that we have. We're able to take that technology and have lenders globally use us in the back end. I mean, we have clients in Europe, lenders in Europe that are regulated with MiCA licenses that use us. We have lenders in the US that use our technology. And so we're able to do all that because we took the time to build out so many safety and security protocols.
Well, thank you so much, Andre. That's the dedication we have. We've been doing this in the rate. So thank
Yeah.
you so much for
Thank you for
joining
having me.
me.
Yeah, cheers.